In learning objective 1, we're going to look at tax structures. The first thing we're going to look at is actually calculating the tax. We're going to calculate the tax by taking the tax base, or the amount that will be taxed, and multiplying that by the tax rate, which is just going to be the percentage of tax. So for example, if we had $100,000 in taxable income, that would be our tax base. And if we had a 10% tax rate that applied to that $100,000 in income, we would multiply 10% times $100,000 to get $10,000 for the tax due. Now, looking at tax structures, there's three different structures we're going to look at: progressive, proportional, and regressive tax structure. The first is the progressive tax structure, which is representative of the United States income tax system. And what that is going to be is for the tax rate to increase as the tax base increases. So for example, a married filer that has income up to $19,050 might be subject to a 10% tax rate. For any amount of taxable income above $19,050, so $19,051 up to $77,400, for that tax base might be subject to a 12% tax rate. So the tax rate is increasing as that tax base increases. The second tax structure is going to be a proportional tax structure, and that would be if the entirety of the tax base, the entirety of that income, was, say, subject to a 12% tax. So it doesn't depend on the tax base. The tax rate is going to be the same no matter what. Another example of this might be a state and local sales tax. If you were to, say, pay 6% on anything you purchased, irrespective of whether you bought a little bit of it or a lot, then that would be a proportional tax structure or a flat tax. The third tax structure is a regressive tax structure, so that's going to be the inverse of the progressive one. So this is going to be if the tax rate actually decreases as the tax base increases. The closest example of this we have is Social Security tax system, in which the tax base is subject to a 6.2% tax up until the maximum tax base is subject to the tax, 12.4% for both the corporations that pay as well as the individual tax filer that's paying. But once that maximum tax base is reached, it would be a 0% tax base. So the tax rate paid by the filer decreases from 6.2% up into that tax base to 0% after that tax base. So the rate decreases as the tax base increases. So looking at a concept check here, the first asks the three types of tax rate structures, and those are going to be the progressive, proportional, and regressive tax structures. The second concept check asks the tax rate structure for which the tax rate remains the same for all levels of the tax base, and that's going to be the proportional rate structure. And the third is the federal income tax as an example of, and that's going to be the progressive tax structure.